Hey guys, Mike here. So this is really a make or break week for the indexes. We're going to find out, I think, by the end of this week whether or not this is, an actual bear market rally or the real deal. Okay, and I'm going to show you that on the charts of why that's going to work its way out. But also something big on this week is it's all about us. The earnings this week are going to tell us what the consumer's doing. Are we still, remember that term, discretionary spending on things we don't need? Because when that's what dries up first, and when that dries up, not a good sign. Okay, so we're going to see that. We're going to get to find out if the big retailers have fixed the inventory issues, or are they going to continue to drag on? And then I'm going to show you a visual of, when you look at this and you ask yourself, how many times have you asked yourself on one of these downtrends or going to a bear market, like, why is the market moving up all of a sudden? I don't understand if this is happening, if profit margins are shrinking and this is happening, all this stuff. I'm going to show you a visual of, you know what? Because they're anticipating what they think is going to happen. They're totally guessing. They could be wrong. That's why we always end up going back down retesting sometimes, right? But I will show you the visual to show you what I'm talking about. Even when things are going down for companies, their stocks are going up. And another thing, we're going to set a record this year in something, and I'm going to show you that as well. And that's another thing that's going to drive stocks up at some point in time for the rest of this year or next year, okay? And you'll get to see that. But it will be a new record. That's my prediction by the end of the year, okay? And, looking at what I'm talking about when it comes to us, it's the earnings, right? I mean, you can go through here, and you can see right there's Weber. They sell the grills, the charcoal and stuff. So are we still doing that? You go over to Tuesday, you got Walmart, which is a huge inventory problem. Home Depot, we still, doing stuff on our house, things of that nature, building stuff, buying lawnmowers, whatever. Things we can honestly do without unless it's broken, right? Target, another inventory problem. Lowe's in the same boat as Home Depot. Krispy Kreme, we're still buying donuts and coffee that we really don't need because you can make it at home. TJ Maxx, a discounter, which probably will be doing really well, I think. Honestly, I think that's actually going to be a good earnings right there. There's another one for you. Kohl's another one. BJ's obviously usually does pretty well. We'll see what we're doing there for buying in bulk. You're going to have Ross up there as well. Foot Locker, are we still buying the shoes, that maybe we don't need? And, if you go through this, there's plenty of things that are going to tell us what we're doing as the consumer, right? And, of course, then you have John Deere. I mean, that's tractors, things like that for more construction, farmers, things like that. So we'll get a little insight on that as well. And, here's the retail sales. This will come out Wednesday, right before open. And, so we'll see what happens. I mean, I expect a positive number, it seems like, but we'll get to see and get a lot more detail on what is happening on that as well. And then getting into the chart I was talking about, the reason why by the end of the week, this is a big week, is we're right up against that 200-day moving average and a resistance line that we were rejected off of 3 times in April and May, and that goes, it was support back in January. But the one thing to look at, guys, look at all these gaps on the way up. My God, I can't remember seeing that many gaps. Can you? I mean, that's a lot of gaps. So, will we fill them? I don't know. Again, here's your QQQ. It's right there, about 2.85% off the 200. There's another resistance line we're going to have to try to get through as well, which sits right on it as well. You have a lot of gaps on the QQQ. This is actually the weekly, not the daily, so you can't see all the gaps, but there's a lot of them where we gapped up on this run up so far. And, I wanted to put this in here because this right here, the put call ratio, I've talked to you about before. Understand now a lot of people are getting bullish, a lot of calls. Last time this happens in March, boom, we sold off. Right now, we're getting back down there again. Where a lot of people, a lot of euphoria coming in here, so they're loading up on the calls, and so that's where we're at. As you can see, look what happened when we started on this run. It was the opposite, right? Tons of puts, bearish beyond belief. Same thing back in 2020, right? Tons of puts, boom, and right up. That's usually how it works. And by the way, if you get anything out of this, please hit that like and subscribe button for me. I really appreciate it. And so, from a technical perspective, what do you got? You got a lot of overhead resistance coming up. Definitely overextended. The RSI on the daily is overbought, so we know that. And we've had so many. You see all the green candles, right? I'm sure there's other times, obviously, that has happened, but it's a lot. And to see that many gaps, again, I can't even remember how many gaps in such a short period of time. And since, the rule is 90% of gaps fill, but, of course, the reason why that it says 90% because you always get these major crashes. And so if you have all these gaps going up and you get a major crash, it fills most of them. But, the big thing is to look in the next 3 to 5 days if they fill then. That's what you really care about. And so that's what I'm saying from a technical perspective. we'll see. And, because again, it's healthy for the market to start consolidating at some point in time, right? And so, because this going straight up, we've seen that movie, we know how it plays out. A healthy market will start to consolidate, pull back some, all that. But if we do break over the 200, usually what happens is you're going to see a breakover and then a retest. If that retest actually is successful, you will see a lot of money. What usually you see is a lot of money flow in, because I know people, and you can see a lot of people. I've showed you that when stage one is happening on all those stocks, and I told you people are waiting for the successful breakout is over the 200. And when that happens, and you usually get the retest, people just flood in because they feel, the all alert is on, just here we go, right? And it will bring a lot of money off the sidelines. That's usually what happens. That's why you usually get these runs. And I actually had a video for the members on that one, so I'll show them as well. But, if you look, what I'm talking about here, here's the retail traders. We're buying it up, 3.4 billion this last week. 0.3 above the standard deviation for the 1 year average. You can see retail investors are coming in. I'll give you a bigger chart right here to see it. So, that's what we're looking at there. You can go back to 2020. It's all the same thing. And, I thought this was interesting. I want to put, I'm not going to call it smart money, dumb money. I'll just call it our money versus the big money, right? And we're actually increasing our purchases, and the big money is actually decreasing. So see how we've crossed them over. And if you go back to March when we did this run up as well, you can see we're right at that same level as far as the big boys decreasing their purchases right there. So before we end up having that big pullback. And I think the reason why they're doing more than anything else, just because this has been a huge run up. Who knows whether it's a bear market rally? We won't know until we actually successfully break that 200, retest it, and continue to move up. And so, we'll see. They tend to be a lot more cautious than we are, as you can tell. And, one thing that's going to help this continue, no matter what happens, really, whenever we do finally start moving up, is right here, stock buybacks. We will set a new record, as I said. We're already right there. Look at that, $784 billion in 2022. And look at all the rest of these years. I mean, 2021 was a big year. We're going to beat that, no doubt. And then look at this block from 2013 to 2017. We're already past that already, and we're just ending July, right? So, 5 more months or 4.5 more months left. Yeah, we're going to be breaking that for sure. And it's important to understand why companies are doing this, why we'll set a new record, because they know growth is slow. I'm going to show it to you. Profit margins, all that stuff are shrinking big time. They're having trouble passing on the higher cost at this point in time, and the consumer will get wore out. There's no doubt our money, there's a reason why credit cards are getting opened at a record pace. Credit card debt is skyrocketing. There's a reason for that, right? But the stock market doesn't care about that right now. It's like, good, as long as you're spending, I don't care how you do it. I don't care if you're taking money out, from the mob or something, as long as we're spending. And so, but eventually that will come to a head, and that's just the way it is. But they're going to continue to buy back that stock to keep their, stock going up, especially like Apple, all the rest of them, right? And, that kind of leads us to what I was talking about here. When you look at these charts, here's the operating profit margins. You can see it's decreased already this year down to 10.9%. But the good thing is, look, we've been much lower than this before, okay? And so, the average around 8.5% looks like. So still above the average. Obviously, we are decreasing. And then that leads us into earnings per share growth year over year. I mean, you can see it's in the toilet. Big move up in 2020 and 2021, negative 12% now. And, just looking back, obviously being below that line is never usually a good thing. But here's a great thing. Look at this right here. Remember, in 2018, the market bottomed in that crash at the end of the year in December 24th. Yet look at the earnings per share growth, how it kept decreasing all the way into August of 2019, right? You go back over 2011, we started moving up at the beginning, like 2012, yet it kept, those earnings per share kept going down all the way to almost December 2012. And so that's what I was talking about. The market will move up before any of this stuff ever bottoms out, right? Because it's looking ahead. It's just kind of, it gets very forgiving about earnings all of a sudden. And what you see in this last earnings, right? Only 61% of companies are beating earnings. That's not good at all, right? But that's what's happening. And how many times do you see a company give terrible earnings, even give terrible forward guidance, and they're right back to where they were when they reported? They dropped and came right back up just like that. because the market, it puts these blinders on. It says, this is what we think is going to happen. Another way of putting this honestly is, and what I always look at it is, they just made a lot of money on their shorts, and they're like, yeah, let's go ahead and run this market back up. We can always short it if we need to, if we're wrong. That's the simple way I look at it. And then retail will be trapped, and we'll run them down. That's pretty much, how to look at it, I guess, in a way. So, anyway, you try to keep it simple. That's the way to look at it, but that shows you clear as day, and you can use that going all the way forward to know there's a reason, these markets move up like they do, and it ain't, we're a part of this move for sure, but we didn't initiate this move. All right, big money initiated this move to get it going because they started covering all their shorts. That's what happened. And so they had made so much money off those shorts, it was incredible. And so, I'm not crying for them at all. And so, that's where we're at. Big week. We'll see if we get above a 200, see if we can back test it and continue moving up, break through the resistance levels. But, at some point in time, man, we got to have a nice pullback because we are definitely overextended. That's just the way it is. And you can look at any chart you want to and tell that. I mean, there's been huge moves. Some of these stocks are up 100% in like 45 days. Come on. I mean, eventually people are going to start taking profits. There's just no ifs, ands, or buts about it. And that's healthy. It's not a bad thing. But we got to hit a consolidation phase at some point in time to keep this thing going if that's what's actually going to happen. And so, that's where we're at. Let me know what you think in the comments. Let me know what you're doing. If you think we're going to pull back, test the lows, but don't forget, and one thing I want to talk about, and I'll put a video out about this tomorrow, that there's one thing, I'll just kind of put tease to it. We've been lied to straight to our faces, and I'm going to show you what I'm talking about, but there is another reason I think this market's actually moving up, and I'll show you that tomorrow. But yeah, people, we just got straight lied to for months now about this. So anyway, hope you have a good one, and I'll see you tomorrow.